Sunday saw a concerted production decrease by the major oil producers, led by Saudi Arabia, despite U.S. efforts to pump more petroleum under the pretext that they were striving for market stability. Between May and the end of the year, more than 1 million barrels each day will be cut by the Saudis, Iraq, UAE, Kuwait, Algeria, and Oman. Largest production since the formation of OPEC Plus cartel reduced production by 2 million barrels per day in October. OPEC Plus member Russia announced that it would likewise extend its daily cutbacks of 500,000 barrels till the end of this year, calling it a reasonable and preventative measure. This is a preventative action intended to protect the stability of the oil market, a Saudi Energy Ministry official said. The output reductions follow a contentious decision by OPEC and its allies, including Russia, collectively known as OPEC Plus, to cut production by 2 million barrels per day in October. According to the official Saudi press agency, the cuts were made public in a series of statements from different countries. Despite worries that it would spur on further inflation and force central banks to raise interest rates even higher, the reduction, which is the largest since the peak of the COVID pandemic in 2020, happened. Suhail bin Muhammad al-Mazroi, the UAE's energy minister, has adopted this voluntary effort as a precaution to guarantee market balance. On Sunday, it was reported by the official WHAM News Agency that Saudi Arabia would reduce production by 500,000 barrels per day, Iraq by 211,000, the UAE by 144,000, Kuwait by 128,000, Algeria by 48,000, and Oman by 40,000. The declarations were made the day before OPEC Plus was scheduled to convene a joint ministerial monitoring committee meeting on Monday, via video conference. The UAE claims that the production restrictions were made in spite of pleas from the US to increase output as demand rises, and as China, the largest oil user in the world, reopens after a prolonged closure. Consumption will increase as global economies strengthen, thus it's important that supply keeps up with demand for goods and services, including on the sidelines of the CERAWeek Energy Conference in Houston, Texas, last month. Jose Fernandez, the U.S. Undersecretary of State for Economic, Energy, and Environmental Affairs. Hernandez stated that increased crude supply, including from OPEC and beyond, is something we would like to see. OPEC Plus consists of 11 non-OPEC allies in addition to 13 members of the Organization of Petroleum Exporting Nations. U.S. President Joe Biden has repeatedly asked for a rise in OPEC Plus output, after Russia's invasion of Ukraine caused prices to surge. In February, OPEC increased its projection for the global oil demand for 2023, stating that it expects the demand to rise by 2.3 million barrels per day, to an average of 101.87 million barrels per day this year. Fears that a worldwide banking crisis would affect demand caused oil prices to fall last month towards $70 per barrel, the lowest level in 15 months. However, as sources downplayed this prospect and crude recovered towards $80, further market-supporting action by OPEC and others was not anticipated. The chairman of investment firm Pickering Energy Partners said on Sunday that the most recent productions may raise oil prices by $10 per barrel, while oil trader PVM said it anticipated a sharp increase once trading resumed on Monday. As much as $3 higher, according to Thomas Varga of PVM, I expect the market to open several dollars higher. The agreement by OPEC Plus to limit output by 2 million barrels per day from November through the end of the year, which incensed Washington because a supply shortage raises oil prices, was announced in October of last year. In order to encourage economic growth and stop Russian President Vladimir Putin from increasing his income to finance the Ukraine war, the U.S. has suggested that prices must be reduced globally. According to the Biden administration, the decision announced by the producers on Sundays was foolish. We don't think cuts are advisable at this moment given market uncertainty, and we've made that clear, the spokeswoman for the National Security Council stated. Through the end of the year, there will be voluntary cuts, which begin in May. 211,000 barrels per day less will be produced in Iraq. The UAE announced a 144,000 barrel per day reduction in production. Kuwait announced a 128,000 barrel per day reduction. Oman announced a 40,000 barrel per day reduction. Algeria said it would reduce its output by 48,000 barrels per day, and Kazakhstan will also reduce output by 78,000 barrels per day, according to an official statement. Alexander Novak, Russia's deputy prime minister, added on Sunday that Moscow would continue a voluntary drop of 500,000 barrels per day through the end of 2023. In February, after Western price restrictions had been implemented, Moscow unilaterally announced such reductions. According to a source, Gabon will voluntarily cut oil output by 8,000 barrels per day, and not all OPEC Plus members will support the move this summer because production is already running considerably below levels that have been agreed upon. U.S. officials said that Russia's partnership with other OPEC members was waning after those countries cut their oil production unilaterally. However, Sunday's action demonstrates that the coalition is still strong. Economic giants have intensified their efforts to break free from U.S. dollar hegemony, raising the possibility of the emergence of a new global order. A senior Russian official is alleged to have said that the BRICS alliance is developing its own currency. Brazil, Russia, India, China, and South Africa are the top 5 emerging economies collectively referred to as BRICS. Alexander Babikov, the deputy chairman of the State Duma, reportedly made the remarks during the St. Petersburg International Economic Forum event in New Delhi, India. According to reports, Babikov emphasized the value of both nations working to develop a new form of payment, noting that digital payments might be the most promising and practical option. He added that rather than the West, the currency might help China and the other BRICS members. Jim O'Neill, a former head of economics at Goldman Sachs, urged the BRICS bloc to grow and threaten the dollar's hegemony this week. He said that BRICS currency is not a novel idea in an article that was published in the Worldwide Policy Journal, and that the US dollar has an excessive amount of sway over international finance. According to Cointelegraph, the bloc's members were debating the development of a new digital currency for a centralized payment system in 2019. China and Brazil have agreed to trade in their respective currencies, which is a similar development from this week. It will be easier for both countries to separate themselves from the US dollar as the world's reserve currency, with the removal of the US dollar as the middleman. The pact will reportedly allow China to conduct direct commercial and financial activities with Brazil, the largest economy in Latin America. The Brazilian real and the Chinese yuan will be swapped directly, without the use of US dollars. Following the country's late last year authorization of it as a form of payment, China is moving quickly with its CBEC project Encrypt to ensure that use in Brazil grows. While financial regulators tighten the screws on the fledgling business, the US is still committed to waging war on cryptocurrency. How far will the US protect the dollar, in other words, is the actual question. In the section below, please share your ideas and opinions. That's it for today's video. Don't forget to turn on notifications, press the like button, and subscribe.